I'm Charlotte McLeod with the Investing News Network, and here today with me is Scott Melby, Executive Vice President of Uranium Energy Corp. Thanks so much for joining me today.
Hi, Charlotte. It's great to be here with you.
Yeah, it's great to be here. Let's start by talking about some of the big news in the uranium space recently. We had Trump pass down his comments on Section 232.
Sure.
What were
That's
your
been
thoughts?
an overarching issue in the uranium
Yes.
market, obviously, for the last 18 months, not just domestically in the United States market, but internationally. But we did have the president, who received the report from the Commerce Department in April, make a decision 2 weeks ago. The market really, I think, misinterpreted the outcome of that because we actually see it as quite positive, but the equities certainly took a hammering on the Friday news, and it was a little bit of the way the news was released and a lot of it coming after hours. But basically the president was reported with the findings of Commerce Department, which found a national security impact from the level of import penetration of foreign uranium. It had recommended a quota. The president decided against that step at this time, but instead directed his cabinet-level secretaries to form a working group to come up with policies and other things that the U.S. government can do to reinvigorate and support a strong and healthy domestic, not only uranium industry, but uranium conversion industry and uranium enrichment, in essentially the entire U.S. fuel cycle. We see this as very positive in that you have the President of the United States basically advocating to his team to come up with ways to help our industry. So kind of the overreaction or the overselling of the U.S. names was, I think, a bit uncalled for, but I think we're going to see positive developments coming out of the working group in the coming weeks and months.
All of this deliberation around Section 232 you mentioned off camera has kind of put the uranium market to sleep a little bit. And will that now continue even longer as the working group?
Well, that's the other positive takeaway. While we've all been focused on the shiny object in the corner, which is the 232 investigation, the global uranium market continues to rebalance with demand recovering to pre-Fukushima levels globally, and global production being cut dramatically, like those occurring at Cameco's operations in Canada, or Arev's or Orano's facilities in Niger. We're seeing that rebalancing of the market take place, but it actually hasn't been tested because, as you said, the uranium market's been on sleep mode until the president came out with a definitive answer on 232. We didn't get the entirely definitive answer 2 weeks ago, but I think we're beginning to see now the utilities begin to make plans to come out and resume procurement. That's what's going to test the uranium fundamentals that have really changed dramatically in the last 18 to 24 months. So that's the next catalyst that we look to quite eagerly, and we know a number of the utilities, both in the United States and internationally, will be coming to the market.
How do you deal with these circumstances as a company? Uranium is often described as a when sector, and the when is very elusive.
Yeah, well, our company is quite unique in that we are an unhedged producer, so it requires us to have the discipline to really gauge our production to what the market's doing. And at our facilities in South Texas, we actually made the decision that Cameco and others made more recently. We made that decision in 2013. So we shut in existing production, but we continued to license, permit other deposits, increase their production readiness, and also acquire other assets at bottom of the market cycle to grow our resource pipeline. So for us, it doesn't change the plans. For 2019, we're advancing at our Burke Hollow project in South Texas, putting in the initial monitor well ring on the first production area. What would change is if we got very positive signals out of the working group that accelerated our plans, that would be our next step. But we believe that our lower cost, scalable, permitted, licensed assets have a fit in the global market with or without Trump support. But we're still very much engaged with the administration on that process.
So you'll be watching the working group, you'll be watching utilities. Are there any other factors investors should keep an eye on for uranium?
Well, that's it. I mean, it all comes down to supply and demand. And we know that the market suffered from inventories that were built up after Fukushima. But you can't have this kind of adjustment. Cameco itself just mentioned in their investor call last week that they've taken 70 million pounds of supply out of the market in just the last 2 years. That's dramatic. And so, I would say just keep an eye on the Trump administration, what they're doing there, the utility procurement cycle renewing. And then, I was back in Washington, D.C. last week. We also tend to kind of focus on those things. But disruptions can come from, out of the blue. And in this case, we're watching the Iran sanctions very carefully out of the United States with the events in the Persian Gulf and the U.S. ratcheting up sanctions on companies that do business with Iran. It could be entirely conceivable that Rosatom, the Russian company that does so much business with Iran in the nuclear sector, if they were ever to become a sanctioned entity, it would inhibit the way that they could sell and import uranium into the United States, which is currently a very significant portion of the enrichment services supply, but also uranium supply into the United States. So sometimes we have to keep our eye on the horizon for other events. So that's something that your viewers should also follow the Iran situation quite closely.
Okay. Section 232, going back to that for a moment, it's quite connected to Trump. And we do have an election coming up in the future. Would that impact it at all?
Well, there are different ways that the U.S. government can impact the U.S. uranium industry administratively, which would be unilateral actions that President Trump could take, or legislative actions, which would require Congress to come together. The latter is a pretty heavy lift, as dysfunctional as the United States Congress is today. But the thing we have going for us is uranium and nuclear energy is becoming increasingly bipartisan in terms of our impact on climate change and carbon emissions. So, 35 years ago, it was Democrats were firmly against nuclear power and Republicans were kind of lukewarm for. Now you have both parties seeing the value of base load, low carbon energy on electric grids. So I wouldn't hold out the possibility that, or I wouldn't rule out the possibility that Congress could come together on legislation as well. So I don't think it's as dependent on President Trump's reelection or not, but whether or not he gets reelected is another topic.
Yeah, no, great point, great point. As we wrap up, I think there's a lot to unpack in the uranium space. I think for investors, it's a lot less straightforward than some other commodities. What misconceptions do you see often, and how would you set investors straight?
And I don't blame investors because uranium is such an not irrational market, but it's immature in nature. It has very low levels of liquidity. The lag times that you see in uranium are very different than, say, copper or gold, where everybody in the copper gold market is essentially operating off the same information and making decisions. So when prices of copper go up, new mines come online quite quickly. When prices drop, supply goes away. With uranium, you don't have that immediate response to price signals, and that's, as an investor, that's very attractive because, as we've seen in an oversupplied market, those lag times really work against the market and keep prices down and lower than they normally would be. But when the market goes to an undersupplied situation, which we're transitioning into that phase now, it works in the investor's favor because you're going to have price signals calling for new production, and it could be 5, 6, 7 years to bring on new mines that need the permitting, licensing, and big capital lift. Our mines, which have already been permitted, licensed, we've already gone through those steps, and the capital investment in situ recovery mining versus conventional really give us the ability to step up and move quickly. So I'm not surprised we're an opaque market with uranium, but we're definitely seeing the global fundamentals coming together and much better than we've seen in some time.
Okay, well, thank you so much. We can leave it there for now.
Thanks.
Thank you. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Scott Melby of Uranium Energy Corp.